Well, hey there, everyone. Today is Thursday, September 25th, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a focus on reviewing yesterday's learnings and day trading. Now, today's agenda, which you can see on the screen here, will be based on how to set up a debit and credit spread. Once again, this is a refresher from yesterday. Also, when to enter, set profit targets and trailing stops with small caps, also a refresher from yesterday. And then he's going to be talking about the negatives of a divergence between the VOLD and the SPY, the pros and cons of day trading with smaller time frames like 1 and 3 minute time frames, when to use options versus futures, and in the mailbag, the importance of watching bonds and VIX. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Remember, folks, here that we do have the chat open to everyone and we have some ground rules. Remember, always be kind, keep to the topic, no political discussions whatsoever, and please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is going to be sharing because, folks, he's here to give us an edge and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock on Eastern Time for Roger's pre-market show, he began by talking and sharing with us what's on his small cap watch list. And there were 5 stocks today: BTOC, EVAX, PEPG, LUXE, and PSTV. Now, when Roger makes these selections, the key to his process is based on the fact that there must be extreme volume in the pre-market. Secondly, remember that none of these small caps are market dependent. In other words, they're not driven or respectful of what's going on in the broader market because institutions are not putting a single penny into these small stocks. It's individual retailers like ourselves. And despite what you see happening pre-market, only consider trading these during normal market hours. And if you don't see an entry before 2 p.m. Eastern Time, just forget about it. And under no circumstances should you be holding any of these trades overnight. Now, once again, Roger, in today's session, is going to be talking about, what the entry points are, setting profit targets, and how to use a trailing stock when trading these small caps. And that's a refresher from what he presented yesterday. Now, as far as Roger's catalysts for today are concerned, and once again, we know what catalysts are, right? This is information that is either known or will be known during today's trading session, but is not yet priced into the markets. Now, from the Fed perspective, there was a bunch going on. We had a GDP number come out, which was pretty hot. We had employment data come out, which was kind of encouraging. We saw durable goods about where we expected, and we have a bunch of FOMC members that are giving speeches today. Other things to keep an eye on: the chip sector, where Micron was down 2% and Qualcomm was also down 2% coming into the open. On the crypto sector, we saw that Mara was down 1% and Coin was down 2%. As far as Infotech is concerned, Oracle down 2%, Intel was up 3%, and ACN was scheduled to go ahead and give their earnings before the market opened. They did, and they're down about 1%. In the tech sector, we saw that JBL was going to go ahead and submit their earnings before the open of the market, and they're down 6%. The retail segment, once again, CarMax was scheduled to release their earnings before market open, and they're down a whopping 23%. And then there's Japan, where the Nikkei closed once again, setting record level highs. Now, as far as Roger's pre-market stock watch list is concerned, there were several shorts and longs that he was taking a look at, and you see them there on the screen. The thing I'd like to point out is that if you look under the longs, Walmart and TJ Maxx both have asterisks, and what that means is that these are A-line setups according to how Roger basically establishes those settings. So those were the shorts and the longs pre-market, and be interesting to see which of these are still on Roger's list as we are here at midday. And finally, folks, as far as his pre-market closing comments are concerned, he said, look, guys, coming into the markets, we were down across the board. The MAGs, the SPY, the QQQ were all selling off. And in his opinion, once again, not the sky is falling, not a huge, negative thing, but just really drifting back towards fair value, which is something that he's been predicting for the past several weeks. We also noticed that the VIX was inching higher and bonds were drifting lower. That event, VIX going up and bonds coming down, does not portend well for stocks moving higher. He also noted that there was no congruency in the market sector, so therefore no real directional bias. There was a high percentage of companies that were below the 50-day moving average. That's a key watch thing for him. Also, he noted that the leading stocks that he tracks, they're all way overextended. Remember, folks, there's really only a handful of stocks that have been responsible for the lift in the market, and they're starting to sell off, and those that are still up there are way overextended. As from Roger's perspective, the correction that he predicted almost 2 weeks ago is in fact underway as things are moving back into fair value. And his warning for the day was, hey guys, I do expect buyers to start stepping in, but resist the urge to bottom pick at this point in time. Just go ahead and be patient. The opportunities will be there. So once again, we have a good group of people here. As a matter of fact, fantastic group of people here. I want to say hi to all of you. Roger's going to be joining us in about a minute or two. And I just want to remind everybody once again about what's on today's agenda. Now, the focus today is going to be on reviewing some of the learnings from yesterday and on day trading. And from yesterday, for example, he's going to give us a refresher on how to set up debit and credit spreads, because he wants to make sure you all get it. And even though he spent a fair amount of time on this yesterday, still a lot of comments going, I'm still confused, Roger. So he's going to spend some extra time here. Secondly, with regard to small caps, he is going to go over once again, what the entry points are, how to establish a profit target, and then how to go ahead and use a trailing stop if you are trading these small caps. He's also going to talk about the negatives of divergence between the VOLD and the SPY, because these are critical market internals that Roger sees. And when there is divergence there, how do you deal with that? He's also going to talk about the pros and cons of day trading with smaller time frames, and particularly if you're looking at trading 1 and 3 minute time frames. He's also going to talk to you about when to use options versus futures. Okay, this is when you're looking to day trade, there are some there's some ways that you can go ahead and do that. One of them trading options, another trading futures, and he wants to cover that for you all. And out of the mailbag, number of questions still coming up with regard to what the importance of watching the bonds and the VIX and why that's so critical to Roger in his decision-making process. Now, folks, if you've got any question during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Remember that the chat is open to everyone, so remember the ground rules. Be kind, keep to the topic, no political discussions at all, folks. And please, please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is providing. Because after all, folks, he's here to give us an edge in the market and to help us all become more consistent and confident in our trading. So once again, terrific group of people here. Roger's going to be joining us any moment. I know he likes to say hello to you all individually. I'm just going to say collectively how great it is that you're here. It's always wonderful to see you here at midday. And for those of you that, for whatever reason, either don't know or don't join us at 8 o'clock in the morning, you're really missing something by doing that. That's a free session, 8 o'clock every morning, Eastern time. And Roger wakes up, and he helps prepare us for what's going on in the day. And I'm glad that I can summarize that for you. And then Roger's just going to give us updates on all that information and talk about some critical things that he wants to cover. And when I was talking to him yesterday after the session, we were aware of the fact that there were still a number of questions coming in about when to do a debit spread, when to do a credit spread, and how do you do it? Because Roger does have a very unique way of doing it, and we need you all to have that aha moment. And there were also a lot of questions that came up about trading small caps. Where do you get in? What should the profit target be? How do I want to deal with, where do I put my stop loss? How do I trail my stop loss? And even though he went over that in detail yesterday, he wants to do it again to make sure that everybody understands that completely. So once again, terrific that Roger's doing this, these educational series that he's been doing here, not only in the VIP room, but also in the morning during the pre-market session. You guys have been there. Roger does have a very, very specific and defined process for how he looks at the market, starting with what's going on, big picture, holistically, what's going on in big picture, and then how he narrows that down to the opportunities that he likes the best, whether he is going to be day trading or swing trading them. So, folks, this is going to be a great session. I'm glad that you're all here. I see that Roger's in the room. We've got Matt in the room. We've got the team here, guys. You got the first string. Great to see you guys. How you doing midday, Roger? Always great to see you, buddy. Let me start by asking that key question. Any surprises from this morning as to where we are now?
Absolutely. Well, to be honest with you, I'm actually pleasantly surprised that we're recovering or making a bottom this fast. So no surprise in terms of us going down no, not at all whatsoever.
No surprise there, yeah.
But actually, quite honest, I was expecting maybe a little more downside. So this is a not more of an anticipation because the day's not over yet. So I don't want to. But let's just say that we were having this conversation an hour or two later. I would say that this is very nice. I like what I'm seeing right now.
Right.
As a matter of fact, I'm generally surprised at how good the market's looking right now. It's looking really, really good. So no, this is great. And remember what I was saying a few days ago. Here, let me just take my screen real quick. Let me share with you.
Yeah.
With you guys. Let me just share. I'm just going to go here since I haven't turned on TC 2000 yet. Here. This is the SPY. All I wanted was a pullback down to here, and if you look at mags, all I wanted was a pullback. I didn't want much. I just said this is craziness right here. I wanted us to go on this side of the fence. So my worst case scenario was that we were going to go down to here, down to here. So theoretically we could, but I'll be honest with you, this is looking really good right now. And we're not diverging. Even internals are starting to turn neutral. Volatility's coming off. So I'm liking what I'm seeing, but this is not unexpected at all. This is very, very necessary. This is needed to go higher. If we don't have this, we don't go this.
Right.
It all kind of, we have to shake out the weak hands. We have to recalibrate. We have to get some energy. Energy creates rhythm. Rhythm creates opportunity for us. Mm-hmm. I wish there was a better way to say it, but I think that's about as good as it's going to get. So no, I really like what I'm seeing, and again, I've been telling people, folks, I'm not looking for a major sell-off. I just want the market to get back to Stacy's, to its natural. It can't continue doing this. Mm-hmm. This is not normal. This is not natural. This is not how the market works. Okay, if it worked like this, then we would just be printing money all day, and it doesn't work that way.
Mm-mm. No, and you've said over and over again, Roger, this would be a healthy correction back.
Oh, absolutely,
Yep.
Absolutely, absolutely. So the only thing that the only surprise is that we're getting. So usually when we get these turnarounds, usually they kind of. Here's what I was expecting. So let me tell you what I was expecting today. This is the. Yeah, let me go to the SPY. I'll tell you what I was expecting. I was expecting this right here. Everybody knew that this was coming because of the opening, so this wasn't a big surprise. But then I expected the market to stay here longer.
Ah, yeah.
This is what I was expecting.
That's what it's
And
been
then
doing. Yep.
right, and then potentially at the end of the day start either creeping up or creeping down. But this is good. Right after the first 3, 4, 5 bars, we've been basically after the first half hour, we corrected everything and we've been trading above this range the majority of the day. Every time we hit the VWAP, I mean, this tells a story, folks. Every time we hit the VWAP, we've bounced back 1, 2, 3, 4. Look when we hit it hard. We bounced back hard, even harder, and made a new high. So there's definitely buyers here. There's no question about buyers being here. There's definitely buyers being present and very much aware, and very much buying up this move. The question is, are we going to completely fill the gap today, or are we going to break down the view? The only two things I would really pay attention to right now is whether we go up above the 660 level or whether we break the VWAP. And I mean break the VWAP, not touch the VWAP. Break, like go below this level, and stay below this level. So far, it's not looking that way at all. And I guess we trade the now, and for right now, this is looking very good. This is nice, higher highs, higher lows. I mean, there's nothing wrong here. The problem I have is this. And by the way, we were diverging, and now we're really not diverging. This is not a divergence anymore. This is just randomness. Here's the only thing that's still making me a little wonky. Two things. The bond market made a new low about an hour ago. Maybe less, maybe 45 minutes ago. Sorry, maybe 45 minutes ago. And this is the big daddy right here, the ADD. This is telling us we still have a lot of stocks that are trading below yesterday's close with that gap down that we have this morning. So I really want to see this start getting above negative 831. Right now it's at 1,057. I want to see it go right here above this. This is where I want to see it. I mean, don't worry about getting the decimal, the 6.8, 6.9. That's not a big deal. Yeah. Don't worry. Don't get micro. Don't zoom in too much. I'm already zooming in it way too much for you. But the 835.50 area around there, so give or take, I would say that would be a good area. So that's kind of where we're at right now. So the only surprise is we're recovering faster and better than I expected.
Than you expected.
That's the only surprise. If you consider that a surprise, that would be the only surprise.
What's interesting, I know that Cyrus brought up an interesting point here. He said, Roger, could this also just be normal end of the month profit taking, end of the quarter profit taking?
It could, Cyrus. It could. And maybe it's not. And if I start here's the problem, Cyrus. And this is where what I'm always trying to tell people. You see, what this is, and why it's happening, it doesn't make any difference. See, I don't. Okay, I'm gonna. This is actually a very good lesson for you guys, and I don't talk about this enough. And I know this is not easy. It's easy and it's hard. Okay, but I want you to think about this for a second. Okay, now, true story. When I first started law school, first year of law school is really, really hard for a lot of people because you're learning how to learn the law and you're learning law. You're learning. It's a double whammy, and a lot of people find it hard. Most people find it hard. It's new. It's different. It's not what you're used to. It's like going from 5 to 10. It's not college. And we had this one guy in class, and in law school you read cases. Cases involve real people's lives. This guy sues this guy because he cut his tree or whatever, a contractual dispute, or somebody's going against the government, whatever. So what this guy would do is he would read the cases and he would start trying to figure out like he would start being Sherlock Holmes about well, why did this guy do this and why did this guy do that, and I was like, dude, it's a story. you can't read into it. You don't know the truth, but you just know what's written here. So you got to kind of take the market. And it's kind of interesting because Cyrus and Cyrus, I'm not signaling you out. This is actually a good point that Cyrus made, and I kind of said the same thing. Cyrus oftentimes says this is a fake market. He says that all the time. This is a fake market. He's been saying it for 8 years now, maybe 6 years, as far back as I can remember. But here's my comeback to that. Let's say he's right. Let's say it is a fake market. Well, it's been a fake market for as long as we're in it, and whether it's a fake or a real market, it doesn't matter because if you're long and it goes against you, you're going to lose money. So I told him one day, I said, well, let's just pretend it's a fake market. How does it change anything? It doesn't. Trying to interpret why something is happening without price validation is useless. I never go beyond that first layer. Price is doing this, and price is doing this, and this price is doing this because this price is doing that. But I never go deeper. You know why? Because it never helps me make money. But what it does is it puts presupposed ideas into my head. And those presupposed ideas do the following to you. They cause you to miss opportunities. They cause you not to see clearly and objectively. They cause you to stay on with losers because it must turn around. It has to. The CEO said yesterday that the market doesn't care about any of that. So the way I approach the market is I don't care why it's happening. I really don't. I really, really don't. And it's, you know what? Maybe I'm wrong. Maybe I should go deeper, but it's never helped me. And my win rate is pretty high. So my suggestion to you is stop trying to figure out why something is happening because it will never help you make any money ever. So my theory is if it doesn't help me make any money, why should I pay attention to it? And I'm going to leave it at that. Okay. All right. If it doesn't help me make any money, why should I so that's just, and folks, what I'm telling you is unfortunately, there's a lot of things I don't know a lot about. This is something I know a lot about. Trust me on this one. It won't help you. I used to listen to this guy a lot. He was a real big guru. Like and he was a ex-market maker, and he used to write his outlook for the week. And I'd be like, oh, okay, we're going to be bullish this week, so I'm going to only look bullish trades. I used to miss out such good shorts. So don't do that. Be very flexible. Be very nimble. Be very in them right now. Don't go beyond why.
Just another second on this, Roger.
Yeah.
Because I think it's natural human tendency for people to understand why. And I know, for example, when you share with us all seasonality trades and things that occur with regularity, the first thing that comes into my mind is why?
Yeah. Right.
And the point is, who cares? It happens all the time. So if you need to know why, then don't trade it.
Right. And to my credit, even from the first day that I started trading, I never cared about the why. You know why? I'll tell you why. Because remember when I started right after I started law school, or right after I got accepted to law school. So I was so busy studying and learning why with law that I was like, oh, I could just read price action. God bless. I never got into that. It's something that never bothered me. Most people, they got to know why. It doesn't matter why. It's true. It's true what someone just said. It's like an ocean. You'll never know the reason for the wave. Remember the example I always give you when you were a kid, when I was a kid and I used to play with other kids. We used to be my grandparents used to live like on the 6th floor, and I was, like 5 years old, and I used to think it was like really high up. And we used to sit there with other kids, and we used to try to guess. It was on a main street. What colored cars would again, I was like 6 years old. What colored cars would pass by? And if you can get like 5 in a row or 10 in a row, you do. Now, obviously, that's totally random, okay? Totally random. But that's kind of that's the world we're living in right now. Why? I don't know why. I don't know, and I don't care. Okay. All right.
All right. A little, great questions, guys, and we don't want to diverge from today's agenda. But Roger, thank you for taking a few moments on that because it's just good education.
It is. And folks, again, remember what I was telling you the other day. 60% is the mental part, 30% is the edge, and 10% is all the stuff that you guys think is important. And I'm not trying to insult anybody. I'm just telling you, most of the things that you guys think is super, super, super important, not that big of a deal. The mind, the edge, and then all the indicators and the colorful tools and all that other crap. It's just not that big of a deal. Okay. So, what I want to do is I want to start off by giving you, I want to answer some more questions. We got into a couple of topics yesterday, and a lot of people still had questions. So I'm going to kind of go through those topics again right now, and then I want to get into day trading levels. And by the way, we had a nice winner today on Trading Zone Live. We got a couple of people who did really well. We had a great, so Raleigh, in the pit, we did a time spread, right?
Oh, on ACN?
On ACN, yeah.
Yep.
And some people got in at 80. Some people didn't get in at 80. And I did say don't pay more than 80. So a lot of people didn't get in, but some people did get in. And some folks got out yesterday at 95 before the earnings. But then today, if they held it the way, the trade's supposed to be held, it was almost at $2 at one point. So it more than doubled. Let's take a look real quick right now, see how it's doing. 230 here. 165, 370. 165, 370. The order was to buy it at 80 cents yesterday. So let's say you bought it at 85. 165, 370. That's $2.05 right there. Just saying. Got some nice testimonials. Got some really nice testimonials on that one too. All right. So yeah. All right. So yesterday we talked about credit spreads, debit spreads, and I explained to you guys that I do debit spreads and not debit spreads. I don't do debit spreads that differently than anybody else. I do credit spreads differently than most people. The way I do debit spread and credit spreads are actually very, very similar. Let me delete this line here. Okay. And let me see how liquid these options are. No, they're not liquid. Let me find some liquid options. How about Bank of America? There we go. Got something to work with here. So what I showed you yesterday was how I approach whether you may want to write down what I'm saying, and just I'll tell you what to write down. You'll know what to write down. You don't have to write this down. There are a few things that I look at to determine whether I'm going to do a debit spread or a credit spread. I don't approach them the way most traders do. As a matter of fact, I'm the only person that I know of that approaches them this way because I am not fear of directional movement. 95% of the folks who, and I'm not trying to make fun of anybody, it's just the way they do it. It's always been the way they do it. That's the way I used to do it. The way most credit spread traders work is they try to figure out where the stock is not going to go. So here's Bank of America. They'll do a credit spread right here, and you'll get about 7 cents on a dollar, which means, and your win rate will be about 95% of the 95%. The problem is 1 in 20. They'll be wrong because that's just how numbers work. That's just don't argue with me on this. This is a mathematical fact. 1 in 20 is going to go against you, and that option that you sold for 7 cents is going to be worth $3, and you're going to lose everything you gained on those 19 trades. Again, this is just math. We have a post PhDs from MIT here. They're not arguing with me. This is just simple statistics. There's nothing here to argue about. Okay, not that anybody's arguing. I'm just saying that. Don't get your pen, don't get all wound up in here. The way I do now, so that's the traditional way of doing credit spreads. Mm-hmm. And it works great. If you catch a nice run, or maybe if you try to start getting into the trades after the guy has a loser or the gal has a loser, there's a ways to game the system. But ultimately, what if you have 3 losers in a row and then next hunt, you don't know when the numbers are going to catch up to you. And folks, math still works last time I checked. Right, Raleigh? Math still
math is a constant.
Right. Math doesn't change. Math doesn't change. If math changes, then we have a problem. Houston, we have a problem. So getting back to our example, getting back to what we were saying here. Right. There's Ken is a post PhD in math from MIT. He would be the first to tell me if I was going off the reservation, and he hardly ever. I'm not. So again, 1 in 20 or 20 to 1. The way I do credit spreads is very different. I try to do a 1-to-1. What does that mean? Oh, anyways, so what does that mean? Well, when I lose, I try to lose equal to what I gained, not 1/20th of what I gained on the trade, right? We want a 1-to-1, and we want a high win rate. So the way I decide whether I want to do a credit spread or a debit spread is I'm basically always looking for a debit spread, and if the numbers don't jive, then it ends up being a credit spread. So let me show you what I mean, okay? Here's BAC, okay? BAC. This is Bank of America. I'm not picking. Well, I'm actually picking the stock because it's on my list. It's at the 8-day EMA. It's a very nice looking stock, and I'm actually pretty bullish on financials right now. And I wouldn't be day trading this. I'm just telling you this daily trend looks good. So let's say we go out about 15 days, and let's see here. All right, so 51.50 versus 52. Now, from now on, if I say the word spread, I'm talking about the distance between these two things, okay? Spread, that's this. The difference between these two things, or the difference between these two. It's just basically the difference between the two, okay? And then if I say premium, that's the dollar difference in the spread. So, for example, what's the spread here? 50 cents. What's the premium here? The difference in the premium. Well, it's an old print. It's about just, and again, I'm ballparking it. I'm not trying I'm not trying to place this trade. 30 cents. Okay, so you're telling me that I'm risking 50 cents here. The spread is your risk. The spread is your risk minus what I'm taking in. So let's say let's just say hypothetically that Bank of America goes to zero tomorrow. We find out they're fraudsters. I'm making all this up as I'm going along, just to be entertaining. Obviously, that's not true, and that's not going to happen. So what's the worst case scenario? Well, the worst case scenario is you lose 50 cents per 100 shares, and you'll make 30 cents. So your worst case scenario is 20 cents.
20 cents, yep.
So you lose 40%. If this thing goes like down here, basically just totally crashes. Okay. 40 you lose 50, you lose what did I say? 20 cents. You lose 20 cents. So in this case, because the amount of premium is 30 cents and the spread is 50 cents, that's not a good debit spread. That's a good credit spread. You know why? Because if I'm doing a debit spread, I want the 30 cents that I just mentioned to be less than 25 cents because I want to have at least a 1-to-1 shot. So if I like the stock long and I could do my spread for less than 50%, less financially, if I could do the spread for less than 50% of the cost of the difference of the spread, then I will do a debit spread. Otherwise, I'll do a credit spread. So in this example, because we could be taking in 30 cents because the spread costs 30 cents and the difference is 50 cents and 30 cents is more than 50% of 50 cents. 30 cents is more than 50% of 50 cents. I would much more lean towards a credit spread. However, if the difference here would be whatchamacallit, 20 cents, then I would not be doing a credit spread. I would be doing a debit spread. So 99.9% of the time, the way I determine if I want to do a debit spread or a credit spread is not by what the stock is doing, is by the premiums on the stock. I've already determined what the stock is doing before I even determined what kind of trade I want to do. So basically what I decide is I like this stock. For whatever reason, it's on my watch, and it's on our watch list. It's the 5th stock on our watch list. Or we could take this stock if we want. I don't care. I like this stock too, by the way. So let's just take a look at it. Yeah, this would be a put. And again, what I'm trying to get you guys to understand is the relationship between the spread and how much we're paying or taking in on this. The difference between the spread and how much of a debit or a credit we're taking in or paying in relationship to that spread. Everything else is you already know, because I already teach you how to pick good stocks. You see, so excuse me, back scratcher time. Okay.
To your point there, Roger, it all
Yes.
begins with the fact that this is a good stock to trade.
Yeah, you got to go with what you like. And we could do the
Yep.
complete opposite to the downside. I just don't want to start doing examples to the downside because people get a little more confused when I'm teaching. I
Right.
like to teach with
Yeah.
upside. So for example, look at WBD. It's moving up in a nice slope. I'm not going to get into why I like the stock because we spend way too much time talking
We've
about
already
that
covered that. Yep.
like every single day we talk about that. And I have gazillion videos, examples, and all that stuff. And plus I give them to you every day. Okay. So I don't need to explain that. But so let's go 15 days out. The stock is about 1920. Okay. I'm going to right at the money because I'm expecting it to go higher. So right here, 1920. About right at the money. So and again, I'm doing this for the first time with you guys. So we're going to come to the same conclusion together. Okay. What's the spread here? It's $1. These are all dollars here. Everything over 1750 is $1. So these are dollars. So let's just say, okay, the spread, we know what our spread is. It's $1. Now, the next question, and the only question is, this is a fact. The only question is how much we're going to calculate right now. More than 50% of $1 or less than 50% of $1? Yes, Bob. Yes, yes. The lower the number, debit spread. The higher the number, credit spread. That's it, man. That's it. You seem to understand it, and I'm not picking on you. I'm saying you seem to understand it just fine. So let's try it, okay? So let's just, and again, I'm just eyeballing this. I'm not going to do forensic accounting here, okay? So okay, 87 and 55. Yeah, that looks pretty fair. Okay, this must have been fairly recent. So what's the difference here? 87, 55. This is definitely less than 50 cents. This is like 32 cents. Definitely not going to be on the puts. Definitely not going to be doing a debit spread here. Definitely not going to be doing definitely not going to be doing a credit spread here. Because I'm only taking in like 33 cents out of $1. I'm taking in like 33 cents. You guys understand?
Mm-hmm.
So now, but I still like the stock. So let's now go to calls. Go 15 days out. Too expensive. Too expensive on the call side. Again, dollar, more than 50 cents. So nothing here. I would just probably end up just buying. I would just buy a call, or maybe I'll do this, but still about 50 cents. You see? So if I want to do a debit spread, I want my number to be not as much, but 40, 30% less than the halfway point. If I'm doing credit, I want it to be more than 50%. Less than 50%, credit spread, debit spread. More than 50%, credit spread. Okay? And then obviously, do I think the stock is overextended? Does the stock have good liquidity? Because otherwise the option won't, and blah, 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 all that other stuff. So this is the second time that I'm explaining it. Do you guys have a better understanding than you had yesterday? Let's just see if people understand it a little better now.
Sure. And Roger, there was a question earlier on. With these spreads, you're looking at a delta of 0.5. Is that what you like?
Somewhere in that ballpark.
Yep.
Somewhere in that ballpark. Let me see something.
Much better, much better, much better. Yep.
Okay, I want to make sure that people in hold on a second. I want to forward this link to people in my trading pit. Yeah, a lot of people are not. I want to have more people in here so they could watch this. Okay, good. Okay, and then if there's any other questions, we'll cover them tomorrow. So now the next question was small caps. Remember the small cap? We may not even we're going to have to make do today, but let's go to small caps, and then I'm going to get into my day trading questions. So let's just pick a small cap. Let's see, BTOC, about EVAX. All right, EVAX. That's a good one right there. I don't think any of our stocks hit today.
No, they didn't.
Mm. They're all recorded, Robert. They're all in the members area. They're all in the YouTube channel. Okay. See, the SPY just made a higher low. See, higher lows are good. Higher lows above the VWAP. That's good. Made a higher high, and now it made a higher low. That's good. Now, again, I don't know what's going to happen, and I already told you the internals are they're still pretty nasty, and Vold is still going down. So I don't know, but I would be fearful if we get below the VWAP. But if this holds and we continue making higher highs and break above this, we should be okay. I got to say the internals are not looking great though. So I wouldn't be going full size here. There's more risk here than usual. Okay, so I explained to you yesterday how you use the ATR. Let me just make a picture of it. I showed you yesterday how we use the ATR. And I explained to you yesterday, you look at the daily ATR. And I'm going to go through this one more time pretty quickly because we already went through this yesterday. Okay? So stock is doing this. After market opens, the stock is here at our level. We have an entry. Mazel tov. Okay. What's 2 ATR? You don't have to, now anything I'm talking about, you don't need to figure out. You should have it right in front of you. It's 66 cents because it's 2 ATR. This is 1 ATR. 33 cents. Okay? Here, I'll make it bigger. 33 cents. Okay? See the average true range, 10-day daily bars. It's all right there. So 66 cents is our stop loss. Okay? That's 0.66. Here, our profit target is 33 cents and then again 33 cents higher. As soon as we reach the first profit target, okay, we put our stop loss to break even. As soon as we reach our second profit target, we take our profit target and move to the first profit target. We do everything with ATRs. Our job here is to keep stair-stepping, and take profits as we stair-step on these stocks. Because theoretically, you're trying to participate in a huge momentum move. You shouldn't be letting it go against you very much. You want parabolic. This is you want to get caught into the buying frenzy. You understand? And if you're doing that, you want to just keep pyramiding. This is everything I'm talking about only applies to the small cap, micro cap stocks that I give you for free for now in the morning session during the morning show. This has nothing to do with anything else we're talking about. Right. This doesn't apply to any other world we live in, okay?
Because the other thing I hope people understand this is that even though you might see a parabolic move in a small cap, it'll also turn around and drop like a rock on you also. So having a stop loss in place or a trailing stop to protect your profits is critically important because it moves that fast.
That's right. That's right. So let's switch gears. I want to talk. Look at this, Raleigh. We're talking about credit spreads, debit spreads, large cap stocks, and now we're switching gears into day trading mode. Okay. So first off, Matt, great job today taking that nice winner on Trading Zone Live.
Yep, that's short. Yep.
Yeah, he took a nice short today. And he took a pretty good trade yesterday too, actually. So, Matt, we were watching this area right here, and we were watching Alpha Zone Pro. So, you know how I give you those levels in the morning, folks? Mm-hmm. Those levels are very, very, very important. But these levels are the most important, okay? These levels are the most important because these levels are literally set by the market makers. They're not set by us. We use daily options and implied volatility and price volume, like VWAP levels, to generate these levels, okay? And we use these levels a lot. So if you see one of my levels is coinciding with one of these levels, that is fantastic, okay? Thanks, Richard. So be very, very cognizant of these levels. And I'm talking about this. If somebody doesn't know what I'm talking about right now, Here's what I'm talking about. Here's what I'm talking about. This stuff right here. These levels right here on the SPY. See these levels right here? So I give you these levels for free every morning. And from what I hear, the word on the street, at least Clyde tells me that people like these levels a lot, that they're very helpful. So I'm going to keep doing it because I'm a sucker to help you guys. I want to make sure that you guys have what you need. So when you see those levels that I give you, and you see them, I'm assuming you have the Alpha Zone Pro, and if you don't, you should get it. But these levels are absolutely fantastic. So when Matt gives you trades in Trading Zone Live, like he did today, he's a lot of the times he's looking at these levels and he's making sure that momentum levels and market internals are jiving, that they're moving together. So today, for example, let me give you the playbook of what happened today. Okay. So the market right here. The market gapped down right here in the morning, okay? Right here, gap down. And then we usually we don't do anything this early in the morning. Then it started going up, 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 right here, okay? And we were looking at it, and the Vold was going up, up, and then the Vold started coming down. And when the Vold, right here, it was just going sideways like this, like this. This was what was happening. And when we saw this bar right here, in other words, the Vold made a new low, Matt went short right there on that bar. Okay. And it was a very nice bar. He stayed in the trade for a little while. The trade made money. And when that happened, SPY right here, see this? It broke down right here. And he took a nice profit right there. Now, why did he go short? Aside from the fact that the Vold was breaking down, so bonds were making new lows on the day. ADD line, the advanced decline line, and still is, by the way, not was, still is very, very weak. We're still at only 1,093, which is telling us this gap down day can still bite us in the butt at the end of the day. But my point to you is this. Do you see how, and by the way, remember yesterday we were up here and I told you that the 5-day area, the most volume was traded right here. Notice how price gravitated away from this area back into the value area, back into this pocket before breaking down here. But if we continue moving higher, we can get back into this area, and that's the balance area. That's the area we want to see. And that area is from 660 all the way to 665. So my point is, when you start watching all of this, when you start seeing all of this together like this, and you start seeing price action like this, you start getting a pretty good feel for what's happening in the market. Literal, not tick by tick, but pretty close to it. And that's what this guy, where is he? I don't see his face. Matt, are you on camera right now?
Yes, he is.
All right. That's what he sits there like this, and he's looking at that SPY all day long, and he's ready to pounce. So good trade. That was a great trade today, and it was a great trade yesterday. So what is the market doing right now? What should we be paying attention to? Let me now kind of go back, and then I want to give you my stocks for the day. I haven't given you that yet. And then I'm going to have a day trading class. And if you did not pay attention, you should pay attention because today will be the last. I believe today will be the last day. I know there's a few more spots left, and we'll fill those, and that'll be that. Okay. So right now we're above the VWAP on the SPY. Okay. On the short-term basis, we're overextended to the downside. So right now, I'm actually expecting price to kind of stay around here, but actually not break down too much. Because I think if it would break down, it would have already broken down, headed down to here. I think price is going to consolidate around here. Okay. And I think VWAP is going to be a nice support for the time being. And it's also lunchtime right now. And volume is really, really low right now. Look at this. Oops. Volume is really low right now, and I'm not seeing any pickup soon, but we're still in an uptrend. So I'm hoping that this will not break this level right here. In terms of, oh God, in terms of, and this is giving, these two things are giving me a big, big, big pause because the volt keeps making lower lows and the ADD is near the bottom. So I don't think, and this is what I was saying when we first came on here. I was saying, Raleigh, I remember we're not the day is not done yet. We still have several hours to go. I like how we're looking right now, but again, it's not the end of the day. So these two things are giving me a big pause because I know the Vold, and usually the Vold wins over SPY, and the Vold just made a lower low 15 minutes ago. Um, and ADD, I mean, we're still in this area. I mean, this is not huge down, but significant enough to pay attention. So if we can get away from that, that would be great. On the other hand, we're getting pretty close to this area. I think once we pass above this area, which is 660.36, I will feel a lot more. I will become a lot more bullish once we get above the 660.35 area, because that's 70% of the value area right here. So we need to get into that window. And similarly, and ironically, once we're in this area, we would have already filled the gap. So I guess basically everything I'm saying, I didn't look at it from that perspective. But yeah, I guess if you look at it from a technical perspective, if you're up here, you're going to be pretty good because you're going to be back into this area. If you are looking at volume profile, you're going to be at the lower end of the volume profile range of the last 5 days, which is a good place to be. So you want to start moving. We want to start coming back here before the end of today. All right. Hopefully that wasn't. Hopefully that wasn't too. Hopefully that was valuable information for you. And that's not education. That's actionable.
Actionable
Yeah,
information.
yeah, that's actionable. Now, I'm not going to give you options today because I want to start my presentation right now, and I think today will be the last day we're doing this. But let me give you my shorts, and then I'll give you my longs, okay? Penny said Vold made another. Yep, you're right, Penny. It did. Yep. Yeah, I mean, going against the Vold is a very dangerous proposition. Hey, Bugs, how are you? Good to see you here. All right, UPS to the short side. Let me make this smaller. We don't need to. We don't need to have such a big view of all of this. Nice to have that. Hey, good to see you. FI align. This one's getting a little overextended. IRDM. This one's still okay. IFF. Still okay. PRCT. This one's still okay. These are all shorts, folks. HI. I got this one. Can't read my own spelling, I don't think. H-A-A-E-I maybe? I don't know what this one is. All right. No, this is perfect. Look at this. Where's my there it is. There you go. There's your flag. And there it is. HAES, HAES. Yep, that's it. Thank you. Thank you for helping me. No, Pink Sparkle's got it. Thank you. Thank you. Thank you. Thank you. Yep. Just coming out of the compression. Thank you so much. Now let's do longs. HII. Dino. Ooh, that's a beauty right there. Circle. There's this one stock that I like. I heard a few folks made money on it today. Clyde gave them a little bit of a. This was a bonus trade we took in the pit today. WBD, Bank of America, and by the way, I do like Bank of America. KTOS, SSRM. That looks really nice. Just touched the 8-day and it looks like it wants to pop up. Nice trading action today. Levi's. Ooh. Hey, Matt, take a look at Levi's. I mean, or not right now, but keep an eye on Levi's, Matt, okay?
Mm-hmm.
It's a little overextended. The stock a little overextended. CVI. And DK. Oh, this looks good too. I'm good. I gotta tell you guys, I'm picking some really nice stocks for you. They're 1.5, not 1.2, 1.5. Now, folks, get my sheet here. Now, do we have any questions about anything before I switch topics again on you?
Yeah, Roger, a question came in earlier and I thought it was put extremely well, just trying to put some structure around when you go with the credit or the debit. George wrote in and he said, hey, Raw, if the premium is 50% higher than the spread, then we look for a credit spread. If it's less than 50%, then we look for a debit spread. Is that correct?
That's correct.
I thought that was a nice definition right there.
Yep.
And
Excellent.
then let's say the only other thing that came up was just a reminder for when you're looking at day trading, the 1 minute, the 5 minute, and the tick charts. I think that Bugs uses things of that nature.
That's right. That's right. All right. Can somebody repost the longs and the shorts?
Yeah, I will do it.
All right. Now, folks, I'm going to be doing a class right now. I don't think there's many more. And we're still making lows on the Vold. Okay, folks, we're going to do a class. This is going to be about day trading. This is going to be very exciting. A lot of people have been doing actually really well in this program, and I want to talk about it today. And if there's any other questions, please wait till I get through this. I'm going to go ahead and close the chat, and we'll get through this. I mean, as soon as I get through this, we'll start it again. Now, folks, the profits, the performance we're going to be showing you today, they're not typical. We're not going to make any future earnings claims.